It started on Friday when there was a big fall-off in crude oil, and then over the weekend it became clear that Saudi Arabia and Russia were simply never going to be on the same page regarding production cuts, and Saudi Arabia, threatening Russia, is going ahead and reducing its prices to China and ramping up production by between 10 and 12%. And this caused a good old-fashioned oil shock overnight Sunday into Monday. So that was part of it. And then the other thing is the spread of the COVID-19 coronavirus. It seems to really hit home in New York over the course of the weekend. There were several very serious news conferences by the governor of New York and the mayor of New York City. And what happened when the market got underway on Monday was we had no idea where the Dow would actually be when it opened, because they'd suspended the futures market, which I've never seen before. In the end, the Dow opened down 1,500 points and immediately went down to around 1,800 points. The rules of the stock exchange means the circuit breakers kicked in at that point, giving everybody a chance to breathe. This is the first time these new rules involving the stock exchange and the S&P 500, the broad market, if it goes down by 7%, which it was, the Dow was down by 7% too, then in go the circuit breakers, there's a pause for 15 minutes. Now, what happened was when the market came back up again, it went down a bit further, but then it kind of stabilized. It was 1,200 points down. Towards the end, though, it fell far further. And what we have now is the Dow flirting with bear territory, technology stocks actually in bear territory, and here are the numbers for you. Dow, Nasdaq, S&P all down around 7%, the Dow down 2,013 points, Nasdaq 624, S&P 500 225, and the Dow around 23,800.